What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. These are some hot dividend stocks to look into and buy right now. They are down. People are capitalizing on these stocks right now. So these are some big companies. By the way, I am back. There were some issues with the internet, my apartment complex, but I am back to show you a stock and dividend analysis video. So if you are new to this channel, again, we are 4,000 subscribers strong. I post stock and dividend analysis videos on stocks that I'm considering, stocks that I'm looking into, and stocks that I own. And I provide my rationale as to why these are great stocks. I am not a financial advisor, but all you have to do is smash that like button. All these videos are free and these are for you guys. And it's great to be back. Honestly, the internet was down and I feel great. I feel well rested. Midterm went really well, but I'm ready to do some more videos. So let's check out these stocks right now. That first stock would be Apple. So I do not own Apple, but I'm highly considering this stock in my either E-Trade dividend portfolio or my traditional or Roth IRA. I have a traditional IRA right now on Fidelity, but I am highly considering a Roth IRA. And this is a great growth stock. This is a stock that increases its dividend. Everybody's like, ooh, 0.68%. But look at how much Apple has increased its dividend over time. Its net worth is in the trillions right now. How often can you say $1 trillion company? These guys have blown up. Can you imagine owning these guys in 2005 at $1 or at 67 cents a share? Unbelievable. Those guys blew up completely. They split their stock. So a lot of you dividend investors that have these guys, or you just had these guys in your traditional Roth IRA, this ain't going nowhere. It's just going up. It ain't going down. The tech industry right now is taking a little bit of a hit. So this is a stock that you should really consider. It has done very well against the S&P. People are buying it like crazy. It is $120.92. I'm going to reveal to you its dividend history. So a lot of the people from the dividend investor standpoint, or if you have this as a stock that you are a day trader, or if you are just someone that has an IRA, why this is a great stock. Just because the dividend yield 0.68% does not mean anything, okay? This is a stock that is huge. It's increased its dividend, and I'm going to show you its dividend history real quick. So look at this dividend history right now, okay? This is a dividend, has a PE ratio currently of 32.64, annualized dividend of 0.82. Oh my gosh, big deal. But imagine if you pumped a ton of money into this stock, okay? Let's just say $10,000 and a dividend yield of 0.66%. Again, this is kind of like, those ETFs that grow and stuff. But the good thing is you don't have to pay an expense ratio with Apple versus some growth ETFs or anything. But the good thing is Apple distributes a dividend. So if you follow the Kevin O'Leary philosophy, if you put money in a company, I want dividends. I want something out of it. This is a great stock for you to get because one, it's going to increase its price per share. Two, you're going to increase your net value or net worth. Three, you're getting something out of it. So if you retire and you have this stock for the long term, chances are it's probably going to split its stock again. It already did at $400. It's going to go right back up eventually. Tech industry is going to be blown up. Apple is a very innovative company. They adapt, they change, unbelievable. Them and Microsoft are unbelievable as a company. I cannot believe how well these guys have adapted and changed throughout history, like in the 90s, 2000s. Hottest stock out there right now. This is one stock probably in the next 5 years that I'm going to buy in my M1 Finance dividend portfolio. I'm going to go after the tech and that type of industry, but I need some good dividends to start buying Apple each time. I mean, that's going to be a high percentage. I'm going to get a nice dividend out of it. I'm going to get a nice return. If I put money in it, I want something back. So that's my first stock. We're going to go to the next stock right now. And I'm going to tell you, it's a great monthly dividend. That next stock would be Realty Income. It is now at $62.63. Just raised its dividend again. Not a lot, but man, this has increased its dividend for 100 plus months. Okay, they call themselves a monthly dividend stock. This is a well-diversified real estate investment trust, which I will show you in a second. But man, those monthly dividends are fantastic. Look at this improving over time. This is not only a good stock for day traders. This is a really good stock that is down because real estate took a huge hit during the pandemic. It has increased its dividend. I am at 99.97 or something like that. All I need is one monthly dividend from these guys, and I have 100 shares of Realty Income, and I will continue to reinvest my dividends for Realty Income. It's going to yield me a lot of very nice passive income. It's amazing how diversified Realty Income is. But first, let's check out how diversified Realty Income is. It's unbelievable how these guys are, and they just each month, if you're on Twitter or if you're follow Realty Income, they always make announcements that they increase their dividend. It is unbelievable how well diversified, how great these guys are as a company. They're everywhere. Look, they're in the United States, Puerto Rico, United Kingdom. It's unbelievable. So let's check out their portfolio real quick, because if you invest in a real estate investment trust like a REIT, you need to know what you're getting yourself into first before you start jumping the gun, and you have to know what type of sector, what it's about. So let's check it out. So first of all, what they like to show you is their geographic diversification. You have the UK, you have the United States, and they have 4 properties in Puerto Rico. So here's even in Ohio. They have 341 properties. I'm from Ohio. The lease percentage is 98%. Percent of rental revenue is 4.0%. That is really nice. I mean, look at how big this is. 831 properties in Texas. They even have 3 properties in Alaska. Isn't that crazy? Hawaii, not yet. UK, they have some stuff. Isn't that crazy? 42 properties in the United Kingdom. That is pretty cool. 100% leased. Percent of rental revenue is 6.2%. What a very strong stock. But let's really look into what they type of. We got the geographic, which is really nice. I mean, you got each state, you go on their website, they show you everything that they own in each state, which is really cool. The only one that they don't have is Hawaii. They even have stuff in Maine. Isn't that crazy? All right, let's check this out. So look at the diversification of these guys. Aerospace, apparel stores, automotive collision, automotive parts, automotive services, childcare, beverages, consumer goods, crafts and novelties, dollar stores, education, electric utilities, entertainment, unbelievable, health and fitness, healthcare, home improvement, machinery, packaging, paper, restaurants, casual and dining, shoe stores, sporting goods, telecommunications, unbelievable. Healthcare in the UK, okay, grocery stores. Now this is a well-diversified real estate investment trust that I like. This is what you want as a dividend investor. Look at how diversified. This is a really good diversified real estate investment trust. They show you on their website how things are looking. They show you how they're doing, but let's look at their dividend increases and their dividend history. This is what you like as a dividend investor. In the recent 5 months has not done well against the S&P, and you got to capitalize on a stock like this that is down. Okay, before everything gets back to normal. Okay, the numbers are starting to go down with the pandemic. The vaccines are being distributed. Consumer confidence is getting higher. Things are starting to open up. You have to capitalize on this stock now. This is why I own just about 100 shares of Realty Income. I sold Brinker International. I was up 400%. I threw it in Realty Income. I know I'm going to get those dividends. I know I'm going to get those dividend increases, and I know I'm going to earn passive income with Realty Income. That is why I put money in Realty Income. My long-term goal is to have about $10,000 in Realty Income. That way I can keep on reinvesting the dividends and letting the snowball effect take off even more. So if I can get to buying a share each month, look at the compound interest that can happen, okay? My goal is $10,000 in the Realty Income. That's very exciting. That's what I like to see about real estate investment trusts in their diversification. Unbelievable. 6,500 commercial properties, 97.9% portfolio occupancy, 51 different industries. So let's check out their dividend history right now, because that's what you want to see. You want the Benjamins. So let's check it out. Look at this. 21 cents, 22 cents, 23 cents. It's getting up to almost 25 cents, okay? An annualized dividend of 2.81%, 4.5% dividend yield. It's $62.74. Remember, real estate investment trust. These guys have to give investors money back because they have to pay a certain penalty. So they have to distribute their earnings to all investors, because if they don't, they have to pay a tax penalty and they have to pay higher taxes. So remember, you're putting your money in. I don't have time for real estate. I really don't. That's why I invest in like real estate investment trust, and I invest in Fundrise. I let those guys do the job for me. I don't have time. I'm in graduate school. I'm working as a registered nurse. My head's spinning around in circles, okay, just trying to do papers and discussion board topics. I'm overwhelmed. I don't have time to do that. That's why I invest in real estate investment trust. That's why I invest in realty income. I know I'm going to get a good bang for my buck. I know I'm going to get a good return, and I know that they're highly well-known real estate investment trust among the dividend investors community and investors, because you're gonna get the dividends. It's gonna come. They're very reliable. Now, again, there's no guarantees. You put money in Apple or Realty Income, it's not going to guarantee anything, but you're going to get a good bang for your buck with these guys. Good dividend, solid company, and guess what? If you invest in an ETF like VNQ, in the long term, you have to pay fees. You don't with these guys. So that's the nice thing. They're cheaper. These guys are cheaper. They're pretty diversified. And how many, mutual funds are these guys in too? I did videos on ETFs, Realty Income's in there. Everybody has a lot of confidence in Realty Income. So I'm going to show you one last stock that I think is a great one that you need to capitalize on. I love this stock. It's one of my favorite stocks. Let's check it out. And that stock is Pfizer. It's sitting at $35.64. It has not done well recently against the S&P, okay? But let's think about this. They're ranked 64th in the Fortune 500 in 2020. Their revenue is $47.644 billion. They sell great pharmaceutical products. They pretty much own the IV business, okay? IV bags. So, they own, IV bags. Everybody needs a bolus of normal saline or fluids, right? Because that's what it's about. Okay, people need fluids. These guys control that. They're almost like a conglomerate. Sure, the vaccine, they're doing very well with their vaccine. They also carry great products. They carry statins. They carry Viagra. They carry very good antibiotics for people in the hospital. These are things. They also sell over-the-counter products, okay, that you pick up in the store, okay? They pride themselves on their statins. Viagra is one thing, but, they have other products that people need, okay? Unfortunately, people are getting sicker, okay? They need their statins. Their cholesterol is high. Strokes are high. Cardiovascular issues. We do core measures, as in the hospitals. You have to follow these core measures so you get reimbursed, and two, there's enough research with statins that, if you lower your LDLs and increase your HDLs and your levels are lower, it decreases your chance of a stroke or a heart attack. So that's, it puts stress in the body. Okay, Pfizer has very good blood pressure medications. People, unfortunately, the obesity rate is getting bigger in the United States and in the world. And guess what? People need to get their blood pressure taken care of. Pfizer has great antibiotics. People need antibiotics. Unfortunately, in the hospitals, people need IV bags and they need vaccines. So, to combat COVID-19, so far, the vaccine has done very well. And Pfizer's mRNA technology is phenomenal. So it's sitting at $35.63. It hasn't jumped, okay? This is a really good dividend stock for dividend investors. Now, if you want growth, increase your net worth, I don't know. I don't think Pfizer's a good one, but I want to show you its dividend history. This is what I love about the stock, and I have it on my M1 Finance dividend portfolio. So we're going to jump to that real quick. So with the 4.36% dividend yield, Pfizer has done phenomenal. Annualized dividend right now of $1.56. PE ratio 20.92. Here we go. 26, 28, 30, 32, 34, 36, 38, 39 cents. It's increasing its dividend. You're a dividend investor. You like to see that. Okay. You want dividends, consistent dividends that increase, good companies that distribute dividends, good companies that are cheap, that haven't done well against the S&P, but have increased their dividend because they know that those dividend investors love that. People are getting some money out of it. This is what you like about these stocks. So let me know what you think of these three stocks. We got Apple. Okay, Apple is way down. Let's just summarize this. Apple is way down. Great stock right now. Now the dividend yield isn't very high, but you're a day trader. You want to increase your net asset value or your net worth. You have a ton of money that you can throw into Apple because one, it's split its stock, and two, it's going to increase its price per share. It increases its dividend over time for you. Another thing, we have Realty Income, great monthly dividend stock. That's a good stock that you can have in your traditional and/or Roth IRA as well as your dividend portfolio. Pfizer, great stock for your dividend portfolio. 4.36% dividend. It has increased its dividend over time. Very consistent stock, very cheap stock. This is something that you have to look into and capitalize. So I want to know what you guys think of this video. These three stocks, do you own all three? Are you considering to buy all three? Do you like these three stocks? You tell me right now. Again, I don't own Apple. I am highly considering Apple in the long run. I own Pfizer and I am long in Pfizer and I am long in Realty Income. So let me know what you guys think of this video. Again, I am back doing videos. Make sure you subscribe to this dividend investing channel. I do stock and dividend analysis videos. I try to get at least 2 to 3 videos a week. So make sure you hit that notification bell so you don't miss future videos. Please smash that like button. I don't believe in charging people. I don't have a Patreon account. All I ask you to do is smash that like button. Get active on this channel. Give me your honest opinion. Share your opinions with others. This is what this dividend investing community is about. And by the way, I changed my logo at the top. Let me know what you guys think of that. All right, you guys take care and have a good one.